Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. I'm very excited for this episode and for this time of the year because one of our favourite events in the investing calendar here in Australia is the Sohn Hearts and Minds conference. We get to hear from some of the best investors in Australia and around the world. And there's nothing the Equity Mates community loves more than a stock pitch.
Absolutely.
And we get 12 of them in one day. What more can you ask for?
Nothing more to ask for. And leading up to the Sohn Hearts and Minds Investment Leaders Conference, we're lucky to have some of the experts joining us here on Equity Mates. And we kick off today by introducing and welcoming to Equity Mates Beeneet Kothari. Beeneet, how are you going?
Good. How are you guys? Thanks for having me.
We're very excited for this one. Beeneet is coming all the way from the United States, and he is the managing partner and principal portfolio manager of Tekne Capital Manager, a global fund manager that he founded in 2012. And Beeneet is part of this year's Sohn Hearts and Minds Investment Leaders Conference, which is now in its 6th year. So before we get into today's interview with Beeneet, just a reminder that this is an amazing conference. As Ren said, there's 12 local and international fund managers pitching their highest conviction stocks. The headline, Ren, is that one of the presenters on the day is going to be Charlie Munger from Berkshire Hathaway. It can't really get much bigger than that. And they're also lucky enough to have MIT Institute professor Robert Langer, who is the co-founder of Moderna. So an amazing lineup of experts. The good news is that tickets are $500. It's an online, on-demand event, but Equity Mates are receiving a 20% discount for the first 50 tickets sold. So head to the Sohn Hearts and Minds conference website. We'll put a link in the show notes and enter the code EquityMates, one word, for 20% off. It's going to be amazing.
It is. I mean, getting to hear Charlie Munger speak will be pretty epic. Unfortunately, he won't be delivering a stock pitch, but I imagine it would be Berkshire Hathaway if he was going to pitch a stock. But look, we're very excited. Head over to the website. And to give you a taste of what we can expect on the day, we've got Beeneet here with us today. He won't be sharing his stock pick. He's going to be keeping that one secret. But he has actually pitched in a stock in the last 3 years. They were respectively up 72%, 69%, and 112%.
Jeez.
So, Beeneet, you got a bit of form there. Are you a bit nervous to try and match your previous 3 stock picks?
Yeah, I mean, I was thinking about skipping it this year because of exactly what you said. You're trying your luck, but maybe pitching a 4th stock after 3 good ones is a reminder to everyone that sometimes stocks do blow up.
Yeah. Well, we're excited to hear what you pitch on the day, but in this interview, we want to cover a little bit about yourself and then 2 topics which are very hot in the Equity Mates community. And we've seen you've been sharing some commentary on China and investing in China and then the crypto space. But if we start with you, we love to start these conversations by hearing about people's first investments. We generally find there's a good lesson or a good story that comes out of it. So to kick us off today, can you tell us the story of your first investment?
Gosh. So, just by way of background, I don't come from an investing family. I was born and raised in India. I'd never owned a stock in my life. My parents didn't own stocks. I graduated college with debt. And my first job in the investment world was working for a legendary investor named Stan Druckenmiller at Duquesne. And I still remember to this day that my first interview with him, I had no idea who he was. And as embarrassing as that is, it was incredibly intimidating once you figured out who he was and you had the investing background that I did or the lack thereof. And every day you sort of, I think, had that feeling that we've all experience of imposter syndrome. You kind of felt somewhere between lucky and you felt like you didn't really deserve the job. But the guy I worked for, so this is the year 2005, 2006, a year out of college, the guy I worked for sent me off to a investment conference. There's annually a big gaming conference called E3, used to be held in LA, probably still is. And he sent me off there to figure out between Sony and Microsoft who was going to win this round. The console upgrade cycles in the gaming industry occurs every 5 or 10 years, and we were approaching the next big one. And it's exactly the kind of thing you send your most junior analyst off to do, because rarely can you just show up at a conference and figure out the answer. And he didn't want to go. Understandably, he sent me off to it, and he had a very clear mission. And very clear direction. He said, it's going to be either Sony or Microsoft. Those are the two big dogs. Just go figure out which of those two looks like it's got a higher chance of success. The instructions couldn't have been clearer. I was maybe 6 months on the job. I show up there, and I tried out the Sony systems. I tried out the Microsoft systems. If you played PlayStations and Xbox, it's kind of more of the same. And on my way home, on that first day of the conference, or way back to the hotel, I ran into the guys over at Nintendo. And the line at the Nintendo station started off small in the morning, and by the end of the day, it was wrapping around the block. And, I'm the kind of person, when I see a really long line at a restaurant, I want to get on that line, right? I'm never the kind of person who wants to go to the restaurant where you can get your sandwich really quickly, because that makes me skeptical. And so I got on that line. And back then, this was so early that their console system hadn't even been called the Wii yet. It was called Nintendo Revolution. And it was truly a revolution. It was something completely different. And I tried it out. And I thought it was the most amazing thing I'd ever played. And I grew up as a PlayStation kid. I grew up in college, staying up late, playing Halo on friends' Xboxes. I had a PS3, playing every countless hours of GTA. And so I was a hardcore gamer, PC gamer, all of it. And the Nintendo system was anything but. But I remember just thinking that this had the potential to beat out Sony and Microsoft, which at the time was such a heretical thought, that the next day, my boss called me and he said, well, which is it, Sony or Microsoft? I couldn't muster up the energy to tell him I thought it was Nintendo. I did my work that day on what is the story behind Nintendo. And I had concluded by the end of this trip that it was not Sony or Microsoft, that I thought it was worth putting all of our chips on Nintendo. I got back, and it's hard to describe the feelings, but not only did you have to have the courage of making a big stock pitch, when you were already kind of insecure, not having the kind of background the people around you did, but you were now also pitching a stock that was neither of the two that your boss distinctly told you to go out and research. And describing it was also a little bit counterintuitive, because it was, you hold the controller and you whack things around, and it was nothing like what we'd been used to. The stock at the time was about 14,000 yen. And we bought about $100 million worth. Wow. Over the next year and a half, Nintendo went to 70,000 yen. It was a 5-fold return. And I'll take some credit for getting us in the stock. I'll take zero credit for getting us out. That was the genius of the people that I worked for. And so more or less, we bought the stock, Nintendo, at its low, when no one expected these guys to do anything, because for 20 years they had always been kind of a third tier, not even a second tier, third tier behind Sony and Microsoft, to a 5-fold return. And I'll never forget it. I'll never forget the whole experience, because it's a reminder of how important luck is. But, it's like that old story where you got to sort of be there. A lot of other people, probably didn't go to the conference. I think if you had just been to the conference, you would have seen the product. But it also was a reminder that no matter how young or inexperienced you are, you shouldn't sell yourself short. And I think it would have been too tempting. And I've run into this temptation many, many years thereafter, which is, you often, when you've got doubts in your head, you will cede to the person in the room with experience. And there's nothing that pains more as an investor to have not followed your instinct. And so that was a kind of a funny story, but a rare one where someone with as little experience as me shouldn't have been following their own instinct, but I did, and it was an amazing trade.
And they backed you into the tune of 100 million.
No.
Well, that took that took some convincing and back and forth, but yeah, again, the credit goes to the people with with the decision making powers at the time that they felt they should have trusted me.
So Beeneet, from that moment to now, you've since gone and launched your own fund. So have you developed an investment philosophy? On your website? You mentioned a repeatable, scalable investment process. So are you able to elaborate on this?
Yeah. Tekne is a technology fund with a global focus. I'm based in New York. We've got teams all around the world. We have a team in Brazil, India, China, Korea, and now Southeast Asia and Jakarta, Indonesia. And, I've come to believe a few things about investing. Number one, it's the portfolio that matters more so than any individual stock pick. As much as I love coming down to Hearts and Minds, and, I think one of the most frustrating questions I get asked is, what's your favorite stock pick? Because I don't think about it like that. I think about us owning a portfolio. And a portfolio has some things that are good and some things that are bad. You just never know ahead of time. And in fact, I think a good portfolio has things that are working and things that aren't. But over the long run, the portfolio should do well. So we have an enormous focus on our investment process on the portfolio. So what is a portfolio to us? Number one, it's concentrated. That to me, if there's one lesson I've learned from the Mungers and the Buffetts of the world, is that you can't, you just cannot outperform with a diversified portfolio. So concentration is a single digit number of stocks to us. I think once you get into 20, 30, 40 stocks, at some point you might as well own an index. The second thing is, if you're going to be that concentrated, you better buy a specific type of stock. So we only buy businesses that are growing. We only buy businesses that are profitable and businesses that are unlevered. I think if you own a portfolio of companies that grow, make money, and can do so without the use of debt, and let's say 10 companies that you own are uncorrelated to each other. So your fund isn't a China fund. It's not a crypto fund. It's got one of everything in it. The odds that you take a permanent capital loss on that portfolio over, let's say, a 3-4 year period, I don't want to say it's zero, but it's very low. And that's what we're trying to solve for, which is a portfolio that's concentrated, where the individual businesses can grow, make money, can do so without the use of debt. And then there's not a lot of correlation within that portfolio.
I love that. And I love that the investment philosophy is very focused on the portfolio construction rather than the philosophy for finding each individual stock. I think it's a lesson that bears repeating and reminding ourselves. But Beeneet, you mentioned that it's not a China fund and it's not a crypto fund. It's an uncorrelated fund. But we are going to turn to China and crypto because we were looking at your Twitter in preparation for this interview, and we saw you retweeted an AFR article on yourself, and you said it's very early days in both China and crypto. And that caught our eye because they're the two hottest topics in the Equity Mates community at the moment. So let's start with China. And I guess a lot of people would be somewhat surprised to hear you say it's early days in China because it has been an absolute economic miracle for the past few decades. I think the number is like 600 million people have been taken out of poverty, and we've seen some of the massive companies that have emerged as a result. Why do you think it's still early in the China story?
So let's take a step back and zoom out a level. China will be, with 98% probability, the world's largest economy within the next 5 or 10 years. And when that happens, GDP per capita will be about 1/3 of the US's GDP per capita. In other words, there's another several decades thereafter of growth. And, 10 or 15 years ago, when I made our first Chinese investments, China was 1/7 the size of the US economy. And since then, it's compounded at a much higher rate of return for a longer period than the US has. So it's now already 3/4 the size of the US economy. So very, very fundamentally, it's the second largest country in the world with over 1 billion people. And they've got a very clear goal starting at the very top, which is of growing the size of the pie. And the second advantage that I think they've got is they think about the way that they're going to get there in terms of leadership position through the use of technology. So what that has created, and we as a fund are extremely bullish technology outside of the US. The way we look at it is really simple. If you look at the global stock market of technology company, about 75% of the market cap is in the US, but the US is 4% of the world's population and 16% of global GDP. Said differently, 96% of the world's population, 84% of the world's GDP has practically no representation in the stock market. And that's not sustainable. Now, it's tempting to say, gosh, who's really going to compete with Microsoft globally? Won't you just have one operating system, et cetera? And I would question that, but I would at least grant that, all right, there might be some sectors where you'll have a winner that's an American company globally. But it's not going to happen across the board. So, I think China has shown an ability to develop a local ecosystem. It's shown an ability to play catch up. It's shown an ability to perform. And I think the odds that they give up now, when they're this close to winning the race, and again, the day they win the race, they still got a long way to go the way they calculate, which is getting GDP per capita to be at the same level as the United States is. So it's extremely, extremely unlikely that I think the single greatest economic story of the last 100 years, which is about 1 billion people, have been pulled out of poverty. Right? I think what still mesmerizes me is that the Western media, and I would include, maybe I should say English media generally, rarely mentions what China has achieved from a humanitarian perspective, which is an economic engine that was almost necessary to pull something like 1 billion people out of really complete poverty. And people always ask me, what's the next China? And my answer is it's China. Because there's 600 million people on the east coast of China that are now living a comfortable life relative to 25 years ago. But there are 600 million people in rural China who want to get out of rural China, move over to the eastern seaboard, and the government wants this, the country wants this. And that's a huge economic engine, right? That population is twice the size of the US, twice the size of Europe. And I just don't think you want to get in the way of this freight train.
Beeneet, there's been a lot of concern really recently about the increased, regulatory action that's happening in China. We've seen what's happening in the tech space, the for-profit education, gaming, as well as the economic instability. We've seen what's just happened with Evergrande. So how do you think about these risks, over the next few decades?
Oh, I think over the next few decades, it'll be a blip. Here's how I think about it. I think every 5 years, as we all know, China goes through an election. It's not really an election cycle the way, let's say, America has it with every 4 years. It's more of a confirmation process with a few folks setting out an agenda for the next 5 years. And what they tend to do prior to that 12 to 18 month period approaching the election, which in this year will be in October of 2022, is there's a lot of, they pick up the saber and wave it at areas they'd like to improve their society. If there are parts of it that they don't like, they fix it and take action. What you have to remember is the following. Xi Jinping is a de facto nominee to lead the country again. I think that much is well reported. What's not well reported is about 100 people beneath him who are fighting. They're sort of angling for their political power. And in China, if you don't get that, that's all there was. And your political career might come to an end. And so you've got a number of deputies, hundreds of them throughout China, who've got jurisdiction over some tiny little province, some tiny little sector of the economy, something that they've got an opportunity to show the people at the top that they can enact some change, and this is their opportunity to do so. So I think there's a lot of posturing that's going on. I think it all comes to an end in about 11 months. Number two, I think there's almost nothing that's happened in China that is negative for the economy over the long run. So let's talk about the education shutdown that occurred for the for-profit industry. In 2018, 2019, 2020, China registered a population decline for 3 years in a row. It's never happened before. So you now got the largest country in the world that's focused on growing, now registering population decline. And when they researched it, one of the things they discovered is, well, it's quite expensive to have multiple kids, because it turns out that there's a for-profit education sector in China that's $400 billion annually, and parents don't want to spend that much money. So they shut that down. It wasn't about the education industry. They shut down several other things in the economy that made it difficult for parents to have multiple kids. They've got a 3-child policy, and the average family has something like 1.5 kids, right? I think to sort of stay flat, you need to have 2.2 kids per family. They're targeting 3, and they're tracking at half of that. So they've got much bigger ambitions, much bigger goals. One of the other announcements they had was, if you go to a factory in the United States or Europe, what you would find are employees with wage protections, all these sort of requirements around wearing a hard hat and OSHA-approved safety goggles. No one thinks anything of that. In China, these things don't exist. They make them a rule, and people start screaming, oh my goodness, they're socialists. What people have lost context of is that they're coming from a different place, right? They're solving much different problems. So just like, America didn't crumble when we enabled or enforced minimum wage requirements or all sorts of other factory safety standards, the same also is unlikely to happen in China. So it's hard for me to be bothered by them instituting a number of economic policies that I think are medium-term to long-term quite GDP positive.
I appreciate the level-headedness of your analysis, Beeneet, and you're right that if your news diet purely consists of, I guess, Western day-to-day media, you might have a very different take. So I appreciate it. I guess let's ask for your level-headed take on what's perhaps the most consuming China issue at the moment, which is the US-China, I guess, great power rivalry, and especially what we're hearing and seeing around Taiwan at the moment. What's your take on that, I guess, from a geopolitical perspective, but probably more important for this conversation as an investor who's looking at opportunities in China?
I don't make very much of it. I think one has to remember that the vast majority of wars that have been fought over the last 100 years have had the United States as some, to varying degrees as an aggressor. And as far as I can remember, China was hardly involved in any of them. I think the odds that China starts something that looks anything like a war are quite remote. And they've been very clear, and they've been very consistent about that. In the modern world, it doesn't behoove anyone, when you've got nuclear powers all around the world, for anyone to be talking in such aggressive terms. I think as far as an investor goes, the hot asset in Taiwan that everyone talks about is TSMC. TSMC is probably the single most critical company in the global supply chain infrastructure, and this was true, by the way, pre-COVID. As most people probably know, Taiwan Semiconductor produces something like 60% of the global high-end semiconductors that go into almost anything that you touch these days, including automobiles and many sensitive parts of the economy. Well, I think there's an assumption by a certain group of people out there that China would therefore want to take over Taiwan as a backdoor into taking control of Taiwan Semiconductor. China famously over the last 20 years has poured billions of dollars into a homegrown, so mainland China, domestic semiconductor industry, which has had so far almost no success in producing semiconductors that non-Chinese companies would want to use. Well, the problem I've got with this idea that they would then therefore go after Taiwan Semiconductor is Taiwan Semiconductor isn't an island. Taiwan may be an island, but a semiconductor company these days produces all of its chip by buying equipment that's sold by American companies. It's sold by companies like AMAT, by Lam. It's sold by a Dutch, very important company called ASML. These companies, in that scenario, would be completely shut out of providing sensitive equipment to China. And so you would be buying something, it would be a Pyrrhic victory. And so I think it's one of those arguments that's easy to jump to a conclusion about something nefarious happening. It just doesn't stand up to logic. I think what's much more likely over any reasonable time horizon is that the current state of affairs continues without a clear resolution. And there are tons and tons of examples of that geopolitically over time.
Now, Beeneet, before we move on to discussing all things crypto, I want to close out this part of the conversation by asking you, what are some of the most exciting sectors or companies that you're seeing in China at the moment?
Great question. I would. It's a very long list. Maybe I'll talk about two of them.
Let's go two.
Yeah. You told me earlier we only have 40 minutes, so I'll keep it to two. The first one is, I think we should take very seriously China's commitment to reducing their carbon emissions and decarbonization of that entire economy over the next 50 years. I think we should take most countries quite seriously at those proclamations, but China in particular. And therefore, I think the electric vehicle industry in China, which is the largest automobile market in the world, and growing, is probably one of the biggest and hottest sectors over the next 5 to 10 years. To me, there is no question about it that electric vehicle penetration, which is hovering at about 1%, is going to go to 100%. And I think it's very, very likely that you're at the very steep part of that S-curve where you're just about to rocket. Now, there are tons of limitations. You're not selling software. You're selling a physical thing that needs to be made. You got to dig up and find, nickel and cobalt and lithium. But it's going to get done, because if a country wants it to get done, if a group of countries want it to get done, that's how big things get done. And this seems like it's happening, and China is, I think, ground zero for this. So that's the first sector. The second sector is software. Historically, China has not had a very good software industry. And I think there's a very good reason for that. When you've got an economy that grows 10% a year every single year, software is typically invented because you're looking for efficiencies. When you've got an economy like the American economy, which grows, let's say, 0 to 2% a year, software allows a company to grow its profits, even if revenues aren't growing. Well, in China, just for showing up, every year you get 10% more revenues. Well, if that's the case, no one is looking to make things more efficient. Well, now that growth rate is slowing. And what you're starting to see is enterprise software starting to creep up. And, I think one of the things we track, because we have several investments in this, is the AI sector, and you can track patents. China has now issued the most patents globally of any country in the AI sector. Now, it's very easy to get critical about the quality of some of these patents, and I'm open to some of those criticism. But nonetheless, I think the AI software sector in China, and there's going to be some publicly listed companies over the next 12 to 18 months, I think it's going to be an unbelievable sector over the next 5 to 10 years. So those would be my two.
So Beeneet, before the break, we spoke about China. We now want to move to another hot topic, which is cryptocurrency. And in that tweet that we spoke about earlier, you said very early days in both China and crypto. Crypto total market cap, I think, sits at now 2.5 trillion. So it's definitely had an amazing decade. I guess the question to kick us off, why are we still early in cryptocurrency?
I think if you open up the Wall Street Journal on any given day, there will be 100 topics in there. And if all you do is read the newspaper for a given day, you won't have a clue on how to contextualize those 100 different stories. They all seem really important. But I think if you take a big step back, the very clear, most important story of the last 25 years, and therefore I think this 100-year period, is the internet. And there's no question about that. And I think we're just beginning to enter. You've got to remember that just in the last 5 or 10 years, something like 4 or 5 billion people around the world got connected to the internet via the smartphone. This just happened. It just happened. In the grand scheme of things, this happened last night. And therefore, I think we're entering the golden era of investing in network effects. And to me, cryptocurrencies and any other concept which includes things like smart contracts or protocols or applications, whether it's NFTs or metaverse, any of those things which really utilize 4, 5, 6 billion people being connected 24 hours a day to each other. I think that's where you got to be invested. And today, nothing has the global reach. Nothing has the kind of effect and the kind of foundational impact of cryptocurrencies that I can think of.
It's pretty intense.
Yeah.
Yeah, it's a fascinating time. So we've spoken to, investors who are Bitcoin maximalists, who are Ethereum only, or, open to everything. So Beeneet, where do you sit on the scale?
Yeah. I'm not going to evade your question.
It feels like it.
but I'll offer my personal opinion, and then I'll tell you our firm view, our sort of institutional or house view.
Sure.
Which, as you may guess by the answer, the phrasing of that answer are two different things. I'm personally a Bitcoin maximalist. Just maxis. And institutionally, we think that it's really quite early to figure out what the winners are. And a lot of these tokens, and certainly some of the other coins, so the difference between a coin and a token is a coin is its own blockchain. So think Ethereum, Solana, whereas a token will use a protocol, but often leverage an existing blockchain, such as Bitcoin or Ethereum. Our institutional or house view is that a lot of these coins and tokens present interesting value, and it's really quite early to bet on them or bet against them. And so institutionally, what we have done is we've bet on what we call the picks and shovels of the crypto industry. So for example, I think we're the only fund in the world that's a shareholder in almost every major exchange in the world. Shareholders in Coinbase, shareholders in Kraken, shareholders in Huobi, FTX, Deribit, et cetera, et cetera. And we've really made the bet that you just want to own a slice of it all. Because if this is 1990 for Web 1.0, you don't want to sit here and pick winners. My personal view is the following. And, I'm smart enough to realize that my personal views are often wrong, which is why, we've got a firm that has the ability to some degree to override my personal opinions on things. My personal view is the following. A lot of these coins and tokens effectively exist to create value, which then gets transferred in between people, value being money. And that idea of the money is supposed to create an incentive for people to do the thing that you want them to do, whatever, whether it's play a game or whatever the thing is. Well, why are we creating all these other versions of money if we've got Bitcoin? We've got a $1 trillion asset with a 13-year investment history. It's got no corporation, no one behind it. It's unhackable. It's absolutely sturdy and it's robust. and it keeps getting better and bigger. It's got institutional support about it. Why aren't we just using that? Why are we kind of recreating the wheel? And what I think is going to happen over the next 5 to 10 years is a lot of these protocols are going to start moving over to Bitcoin. And I do believe that Bitcoin can solve most, if not almost all of the problems that a lot of these other coins and tokens seek to solve today.
Wow.
So Beeneet, looking at your website, Tekne is an investor in a lot of industries that seem to be right on the forefront of disruption from cryptocurrency and blockchain. Technology, media, payments, telcos, they're often the businesses or the sectors spoken about when we talk about the disruption that is coming. What companies or what sectors do you see as the most at risk of disruption from this cryptocurrency wave?
Well, everyone. Really, the answer is everyone. And to me, this is just as big as the internet was. There was no one not at risk of the internet. It was simply a question of, did you figure it out in the year 2000, 2010, or 2020? You had no option to not worry about the internet. It was simply, did you need to figure it out yesterday, or have you got a little bit of time? And I think crypto is the same thing. So the big one is obviously finance, traditional finance, what is called TradFi in the industry. And to me, it's a really quite sobering statistic that out of the 7 or 8 billion people in the world, only a fraction of them have really been fully integrated into the banking system in a way that's welcoming, inviting, and profitable for them, for the individual. And there's no reason why it needs to be that way. To me, it's just remarkable that as the connectivity of the global population has gone through the roof over the last 5 or 10 years, billions of people have been connected. The financial ecosystem has remained unchanged. The number of bank accounts at JP Morgan has remained unchanged, et cetera. So I think everywhere you look, whether it's access to money, access to savings, access to investing, access to mortgages and lending and borrowing, all of these features and tools that people like you and I are accustomed to, we're used to, we expected because we belong in the financial system. There's billions of people that don't, I think would never will. And I think the single greatest achievement crypto can have is to create a truly fully inclusive banking ecosystem globally. And I think there's an element of that, which is, of course, something like a few billion people in the world now live in a regime which has double-digit inflation. And I think those people, I think there's a real economic salvation that could be offered to those billions of people in the form of Bitcoin. And these stories, are unfortunately a dime a dozen. And each time you hear or read about them, it sort of breaks your heart. So finance is one. The second big one is the internet itself. And I'm sure you've read a lot about Web 3.0. And, we could do a whole another 5-hour podcast on that. But here's how I would very simply describe it. Web 1.0, so this is the 90s, this is where I grew up, was effectively a bunch of websites that were read-only. You'd go on a website, you would read it, and people hadn't realized that websites could be interactive. It didn't just have to be like a newspaper. When people first created the internet, they just replicated the magazine, and you remember you would have pages where it would actually flip because that's what they just knew. Well, then you had Web 2.0, where you had things like Facebook and Twitter, which was two-way. The problem was it was controlled by corporations. And so all the value you were creating, all the YouTube videos you were uploading to your page or all the tweets you were tweeting out, you weren't getting a dime. It was accreting to some corporation. Web 3.0 turns that upside down. It effectively takes the read-write functionality that we discovered over the last decade, that websites aren't static, you can contribute, you can read, edit, but that the value you create should accrete to the creator in the form of tokens, et cetera. And I think that's going to be a huge breakthrough which will be attributable directly and fundamentally to crypto, because you got to use that underlying technology. And it's going to represent economic liberation that you, I think, haven't seen. Because think about the trillions of dollars of wealth that have been created by 5 companies around the world to now getting distributed to all the people that are actually creating those values.
It is fascinating.
Yeah, it is.
I love talking about it. And you're right, Beeneet, that's probably another 5-hour episode. Ren and I also have a debate around the value of Facebook and metaverse, which is probably another 5-hour conversation. But look, before we get to our final 3 questions, I just did want to quickly touch on Hearts and Minds Investment Leaders Conference. You're back this year for your 4th appearance. So why is supporting HM1 important to you?
It's first of all, I guess there's 2 things. One is the mission that they've got, the amount of money that they've now raised. I lose track of it. The last I'd read, it was over $25 million. I think the number is probably greater than that. You couldn't spend your time and resources in a better way than supporting medical research. And that's to me, and to probably many people who also participate, paramount. The second, which is just a personal comment, is the people that I've gotten to know, the organizers, the people I've been lucky enough to have had dinners with, and who've hosted us over the years, are just some of the nicest people that I've met. It's an added benefit that they all speak English, which you don't often get when you get on a very long flight from New York. But yeah, they've just been, I've kind of, it feels a little bit like a home away from home, because I've now gone there every single year for several years. We've got several clients down in Australia, and it's a nice opportunity to see a bunch of them. So it's been a wonderful little break that I kind of get to enjoy each year, right before the holidays kick in.
Nice. And I've got to ask as well, your last 3 picks, as we said at the top of the show, have delivered 72%, 69% and 112% return in the 12 months since pitching those stocks. So what's the secret sauce to picking a stock that will have a catalyst for change in a period of 12 months that are going to deliver these sorts of returns? I assure you that those results could have gone the absolute opposite direction. To me, I think it's just over a 12-month period, which let's just admit is a relatively short time period. The single biggest driver of something that could help you is catching sentiment. Sentiment is the kind of thing that just think about the last 12 months, or from what happened to the beginning of last year to the middle of the pandemic towards, maybe 6 or 9 months later. When sentiment shifts, you can make 50, 100% very, very quickly. And so if I had to pick one variable, you would probably want to buy a stock where sentiment is quite negative. And if I think about, we first pitched a Brazilian company where sentiment was quite negative. We then pitched a Chinese company where sentiment was quite negative. We then pitched a payments company where it was an IPO, sentiment is quite negative. And so the stock we're working on for this year, sentiment is quite negative, and people are quite bared up on it. It's a phenomenal, it's a $20, $30 billion business. So it's a large company, sentiment is negative. And, if you get those things right, you can make a lot of money in a short period. Well, very much looking forward to hearing the stock pitch. A reminder to the Equity Mates community that if you want to hear Beeneet pitch and the other amazing expert investors and also Charlie Munger, head to the Sohn Hearts and Minds website. We'll put a link in the show notes. And for the first 50 community members who buy a ticket, you'll get 20% off. So a fantastic opportunity to hear some of the best in the business pitch their most amazing stock pitch for the next coming 12 months. So very much looking forward to it. Beeneet, it's been an absolute pleasure chatting with you today. We've had a great amount of fun. And Ren is going to just close out with our final 3 questions that we always ask all guests who come on.
So Beeneet, we like to start by asking, do you have any books that you consider must read?
I assume we're talking in the investment world.
If you've got non-investing ones, we love to hear them. Whatever you think is just a must-read book.
Well, I think I'm a bit of a Peter Thiel fanboy, and I think everyone needs to read his only book, certainly his most famous book called 0 to 1. It is just, the guy is a contrarian. He does not know how to think in a straight line. And I think that book is one of the most powerful business books that I've ever read in my life.
Nice one. Yeah, love it. Second one, forget valuation, just purely on fundamentals. What's the best company you've ever come across?
Gosh. Look, I think the best companies in almost every instance have the best CEO in place. And, it's hard to think of anyone right now operating at the height of their game than probably Facebook. So I think that, I think he goes down as a GOAT, and it's kind of remarkable to see someone at roughly $1 trillion in market cap effectively make a hard pivot. And by the way, to do it quite publicly.
Yeah.
And I think the most remarkable thing about what's happening is, what he had built over the last, let's say, 16 years was just an unbelievable brand. What people underestimated was how amazing Facebook as a brand had become. And then the brand became tarnished and it had negative value. And he recognized it and got rid of it. So I think whenever you see a CEO effectively make a hard turn publicly, especially when it's difficult or not easy to do, you've got to kind of tip your hat to them and watch them and follow them. So, Facebook, it would be my candidate just because of the guy that runs it.
Yeah, wow.
Yeah, wow. Now, Beeneet, this is normally our final question. We have thrown one extra one in for the HM1 speakers, but if you think back to your younger self, going to that video games conference, finding Microsoft, what advice would you give your younger self?
It would be to spend more alone time. I think when you've got the inexperience that I had in the investing world, I was very tempted to spend time with a lot of other people, to build mentors, to learn from others, to go out to dinners all the time, to go out to lunches, to make friends. And I think in doing that, there were times when I lost a lot of myself. And now that I've got 16 years of experience compared to 0 when I started, I find myself wanting to go out to these dinners and conferences less. And I find myself I would rather spend 4 or 5 hours in a book or 4 or 5 hours on the internet going deep in a topic by myself. And I wish I had done that a lot more. I did that a lot in high school. I did that a lot in college. But I wish in my first 5 or 10 years professionally, I had been, allowed myself to be a lot more alone with my own head and with my own thoughts, rather than always kind of seek either the comfort or the experience of others.
Love that. That's some good advice there. Now, Beeneet, a final question specifically for the HM1 speakers, because Charlie Munger is the keynote speaker at this year's conference. If you had 5 minutes with Charlie Munger, what would you ask him?
We're separated by something like 75 years in age or whatever the math is. And to anyone who's approaching 100 years, my real question is, from the day Charlie Munger was born to today, there was this unbelievable revolution that happened called the internet. And, for the most part, both Charlie and Buffett missed it. And I think it's quite remarkable that it wasn't for a lack of access, right? These guys literally hung out with Bill Gates, had Bill Gates on the board. And that's just the one person we know about, right? Let's just assume that they had access to whoever they wanted. I mean, there were stories about Larry and Sergey would come out to visit them when they changed the name of Google to Alphabet to make it like a holding company, kind of like Berkshire. And for someone who's gone through so many cycles, my one question is, when you see something that could be a big deal, what is your process for going through that exercise? And today, I think it would be cryptocurrencies. It might be a giant scam. It might be a huge fraud or a fad, but it might be something giant. And you could sort of go on and kind of just keep investing in the Coca-Colas of the world, and you would do just fine. But I think it would be a tragedy if you didn't invest some resources in figuring it out. So I'd love to ask, often the best questions you can't really ask if you don't have a personal relationship, because the question kind of just gets treated literally. But that would be my question, which is, there must have been many 5-year periods from, let's say, 1990 to today, where you had to ask yourself if this was a big thing or not. And in each instance, you decided not. Just what was that process?
I would love to hear that answer.
Yeah,
Great question. Well, Beeneet, that brings us to the end of our conversation today. It's been an absolute
Thank you
pleasure.
so much.
We've taken so much from this, and I'm sure the Equity Mates community as well will. And we're looking forward to seeing your stock pitch. Here's to another year of 100% plus growth. So all the best, and we will hopefully keep in touch and chat at some point next year.
Thank you so much, guys. Thank you, Bryce. Thank you,
Thanks.
Ren, Alec.
Thank you very much.
Equity Minds.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.